Welcome to Eindhoven Financial Independence. In this short video, I would like to talk about the perennial question, rent or buy a home. Because I am located in the Netherlands, the examples in this video will be specific to my locale. However, you should have no trouble to generalize my argument to your location. In case you didn't know, the Netherlands are one of the pioneers of capitalism and the birthplace of modern stock exchanges. It is among Europe's most developed countries with a standard of living that is the envy of even the developed world. According to UNICEF, it is the best place in the world to raise children. Yet, not everything is rosy in the land of tulips. The country is currently gripped by a housing crisis of historical proportions. According to IMF, home prices in the Netherlands rose the most out of all countries in the European Union during the pandemic. Nowadays, it takes twice the average salary to afford the purchase of an average home. Despite some of the best tenant protection laws in Europe and widespread social housing, the average citizen nonetheless aspires to own a home of their own, especially if they're planning to have a family in the near future. Without going into the discussion of lifestyle and flexibility trade-offs of renting versus owning, in this video, I would like to examine solely the financial aspects of the two options. Let's start by examining the average rental prices in the Netherlands. As we can see, there is a near monotonous increase in prices since 2016, with a brief dip during the pandemic and the sudden rise of interest rates in early 2022. The average rental price as of Q1 24 stands at 18.3 euros per square meter. Comparing that to home prices, we see a somewhat different picture. Home prices literally exploded during the pandemic and only underwent a brief correction once the interest rates went up in 2022. The average home cost 432,000 euros in Q1 2024, which is roughly a 10-to-1 ratio to the average annual wage. In order to establish which of the two is more optimal from a financial standpoint, I prefer to look at so-called irretrievable costs. In the case of renting, the irretrievable costs are the rent itself and the various taxes that the tenant is required to pay. The major difference with ownership is that the owner builds equity in their home over time as they repay their mortgage. Therefore, only the interest paid to the bank constitutes an irretrievable cost. The paid principal, on the other hand, grows the owner's equity in a home by driving down the debt. I've colored in orange the recurring costs and in green the one-time costs that are incurred as a prerequisite to the purchase of a home. Other than interest, the recurring costs are home maintenance and the various taxes paid to local and federal government. The one-time costs represent a substantial upfront expense compared to renting, and for the most part need to be financed out of one's own savings. In the most general case, the transfer tax, which is paid by the buyer to the government, is 2%. However, there is an exception for first-time buyers under the age of 35. If the home value is below 510,000 euros, then they are not due any tax. Newly built homes are exempt of transfer tax regardless of the buyer's age and home value. On the other side of the picture are the investors. They have recently been penalized with a transfer tax of 10.4%, rendering purchase of homes for investment far less profitable than it used to be. The Dutch government offers a mortgage guarantee to buyers to protect themselves in case of financial distress. If the home needs to be sold and the value is less than the debt, the government will step in and repay the remainder. This gives a maximum degree of safety to banks, and in that case, they in return offer the lowest interest rates to buyers. Normally, a buyer will contract a real estate broker to facilitate the discovery and purchase of a home. The typical rate these days is around 2,500 euros. Once a home has been secured, the buyer needs to negotiate a mortgage with a bank. For inexperienced buyers, it is recommended that they do so through a mortgage advisor, who will charge a similar fee as the broker, 2,500 euros. Unless it is a new build, the bank will require that the home be appraised to determine the maximum mortgage, currently 100% of the home value. Finally, the signing of the mortgage deed, transfer of cadastral rights, and the money from the buyer to the seller is carried out through a notary who these days asks 1,600 euros for the service. While these costs are indeed substantial, all the components directly related to financing of a home are tax deductible. Therefore, only the transfer tax and the real estate broker fees are paid in full. Now, I want to make a more detailed examination of renting versus buying. I will take as a starting point a home 100 meters square in area. Based on the data from the figure at the beginning of this video, the average monthly rent would be 1,830 euros. On the other hand, a 100 meters square home would cost about 400,000 euros, and the total sum of irretrievable costs would be roughly 18,000 euros. Assuming the home is financed 100% through a loan with a 30-year mortgage and an interest rate of 4.05%, the gross monthly payment would be 1,925 euros, of which 1,353 is interest. As mentioned before, mortgage interest is tax deductible in the Netherlands. Currently, the deduction rate is set at a maximum of 37%, which brings down the monthly interest to 852 euros. Another major outlay in home ownership are the home maintenance costs. The common rule of thumb is to assume 1% annual cost, or in our case, 333 euros per month. In the Netherlands, real estate tax is very low and varies from municipality to municipality. In this example, I will assume 0.1%, which comes out to 33 euros per month. Since both in the case of renting or owning, one needs to pay the water and garbage disposal tax, those cancel out and will not be further considered. Now, a quick breakdown of the one-time purchase costs. They come out at 18,233 gross, or 12,411 after tax deduction. The exact amounts are based on the values presented in a previous slide. To determine the break-even point, it is useful to plot the irretrievable costs for renting and owning over time, as I have done in this figure. In case of owning, I have taken the liberty to simplify the math by not taking into account that the monthly interest in an annuity mortgage goes down over time. In the time frame of the break-even point, the difference is so small to be negligible. However, it is substantial in the time frame of the entire 30-year mortgage, which I will revisit in the next slide. As we can see in the figure, the break-even point is reached around 20 months. In this slide, I present the detailed calculation. As we can see, the break-even point is reached in just 20.3 months. However, this comparison does not take into account rent inflation. Since 1997, rent inflation averaged 2.61% in the Netherlands. If we project this over 15 or 30 years, which is the duration of the home mortgage in this example, the rent more than doubles while the gross mortgage repayment stays constant. What this means is the renter pays over 3 times as much in irretrievable costs over the 30-year time frame. Without a doubt, the financials are squarely on the side of home ownership. However, owning a home is easier said than done. According to a calculator from a major Dutch bank, a 400,000 euro home from this example would require an annual income of 85,000 euros, whereas the average salary in 2024 is projected at only 42,000 euros. To the average worker, home ownership has become a distant prospect and is the focus of many a political debate in the last few years. I hope I have helped to illustrate to you how superior home ownership is to renting in the current real estate market of the Netherlands. If you enjoyed this video, please click like and subscribe to our channel. See you next time.